Hello, welcome to your next edition of Highlights, our free educational newsletter for those of the candlecharts.com family. And for those familiar with the basic construction of the candlestick charts, you know that we need the open, high, low, and close. What that means is you can use all forms of Western charting analysis. And indeed, at my upcoming seminar in Chicago, by the way, it's my only live seminar planned. What we're going to be talking about, beside going over the essentials of candles, we're going to be discussing adding candles to Western indicators such as moving averages, oscillators like RSI, stochastics, MACD, Bollinger Bands, candles and volume. And the topic I want to briefly discuss in this session is one of the things we'll be obviously delving into deeply in the live session, but I want to touch on it here, is candles and trend lines, because one of the common questions I'm asked is, when you're making a trend line, what part of the candlestick line do you draw to make the trend line? And let me go over that now. Now here in the Dow, okay, the way that I suggest drawing trend lines is the same way you would in a bar chart. So in other words, here we have what's called a bull channel, and you disconnect the tops of the upper shadows, just as you would in a bar chart. Remember, whatever you do in a bar chart, you could do in a candlestick chart. So here the Dow is in a nice bull channel, and the market broke out of the bull channel on this session here in the latter part of May. But what you're going to find once you harness the insights of the candles, you're going to find that very often you're going to get earlier turning signals with the candles than you do with traditional bar charts. So let me go through that now. Now, the confirmation of the uptrend running out of steam with this bull channel is obviously on the close under it. It looks like around this area here, around 12,800. But notice what we got near the highs of the Dow in May. The black real body wrapping around the white real body, that's a bearish engulfing pattern. And many of the candlestick signals can be used as support or resistance. So the high of the bearish engulfing pattern, in other words, the bearish engulfing pattern, just to refresh your memory, is a black real body wrapping around a white real body. And all that need happen is the real body wrap around the real body. The black real body does not have to wrap around the shadow. So we take the highest high of the two candlestick lines that make the bearish engulfing pattern, which is obviously up here, and that becomes a resistance area. And lo and behold, look what we got confirming resistance. Okay, a shooting star. That's a single candlestick line with a very long upper shadow, at least twice the height of the real body, coming after a little bit of an uptrend, which indeed this was. So then we get certainly the final confirmation with another bearish engulfing pattern, the black candle wrapping around the white candle. And this bearish engulfing pattern was also a break under the trend line, but you didn't even need this black real body to really signal trouble overhead, because you had the bearish engulfing pattern here, especially when it was confirmed with a shooting star. So here we would have gotten a reversal signal, a good 150 points higher than we would have with traditional Western technicals. Now, it doesn't mean you do away with Western technicals. What I'll be discussing with trading strategies in the seminar is ways to combine candles and Western technical trading strategies. So, for example, here you certainly should have thought about lightening up on longs. Here you could have actually thought about selling short. I know not many of you sell in the equity market, but you could have done a bear option trade, or you certainly could have scaled out of the rest of the longs here with a shooting star. And for those who were selling here, now, remember, you could use candles in Forex and commodities, and especially on the commodities side, the future side, and Forex side, short selling is a lot more common than it is in equity. So let's imagine this was a Forex or a futures, or, even for those who are comfortable selling short in equities. So you could have initially sold short here, but you might have been saying to yourself, okay, we got a bunch of bearish candlestick signals, the bearish engulfing pattern, the resistance, the shooting star, but look, we're still in the bull channel. So rather than being fully committed to the short side over here, you could wait for a break under the trend line. Now you could say, okay, we got final confirmation on all of the Western technicals that the market has now broken under its bull channel. I'm a little bit more comfortable adding to my short position. So you could add to the trade over there. So lots of cool things you could do with combining candles and Western technicals.